a key barometer on the health of the economy here in Britain is its property sector, and faced with soaring inflation, the situation remains slow for the housing market. Now, according to the latest survey from Rightmove, new sellers actually raised average asking prices by almost 1% this month. But the market is still sluggish. While there's a shortage of properties and credit remains tight, in the capital, the situation is very mixed. Asking prices fell 1.5%, but over the whole quarter, well, they were up nearly some 4%. Now, the market is seeing a boost at the luxury end. Buyers are keen to close deals before April, when the stamp duty is increasing for properties over £1 million. Well, alongside me is Miles Shipside, a commercial director at Rightmove. Miles, thank you so much for coming in. What are we seeing in general? We're still in a kind of wait-and-see situation, exactly when interest rates will go up, I guess, and this is translating through what you're seeing for this month in the property sector.
Indeed, shortage of mortgages is the common theme. We're now starting to see some signs of that coming through in our statistics. So, for example, detached properties are going up in value, up by over 3% year on year, whereas terraced properties down by over 2%. So, as well as regional differences, you've got very patchy price differential factors within regions.
Depending on what's on offer.
On offer, but also wealth demographics. So the more expensive property types obviously appeal to people that can get mortgages, and therefore they're in more demand. And as you say, in London we're seeing some very extreme behaviour where multi-million-pound properties are being snapped up before that April tax rise hike, and so you've got good activity there, compounded by a shortage of property.
How difficult is it, Miles, to actually predict the property market? Because we're waiting for the budget on Wednesday. Again, interest rates are a huge unknown. When will they be raised? So how difficult is it for you to say, well, this is what we're going to see for the rest of the year?
You're quite right to flag interest rates as one of the key factors. Should interest rates rise dramatically, then obviously a lot of people are on the borderline. They're managing to stay in their homes. Lenders are keeping them in their homes. So if you get a lot of forced sales coming onto the market, then it is a factor that really does drive property prices down. So that's one of the key factors. Shortage of property supply is the other aspect. We're measuring property supply to the market down 26% still on pre-credit crunch levels 2007. Terrace properties, though, they're struggling to come to the market. They're down 31% on pre-credit crunch levels, so they're struggling to trade up. So we've got a lack of liquidity in the housing market, and the mass market is really in hibernation still.
What about this luxury? We're talking about this high-end luxury in London, where actually, because of the tax being effective in April, the prices are rising quite significantly. Is there a risk that after April, prices will slump?
Absolutely. In shortage of supply at the moment, the maybe buyers have brought forward their purchasing decisions to now, so therefore you could see more supply, which then may affect prices after this April hike. So it's rather ironic to see multi-millionaires splashing around a lot of cash, many millions of pounds, to actually save 1% of stamp duty, but perhaps that's why they're multimillionaires.
Miles, I wonder whether there's a direct impact on the unrest we're seeing in the Middle East in general. A lot of the buyers here in London are foreigners. Does that have an impact on how you're viewing the market? Because actually people are staying away from London until they really understand what's happening in their country. Or on the other hand, do you see more people from the Middle East coming into London because they'd say, well, at least their capital is safer here?
I think the safe haven nature of the capital of the UK is key for a lot of buyers. They can see it as a very long-term investment. They'll often want, in terms of renting properties out, minimal return. They're just looking for their capital to be safe, and London it's like an international country on its own. Happens to be in the UK, but it behaves very much like an international market.
Yeah, that's certainly what we're seeing as well. Miles, thank you so much. Miles Shipside there.